Business owners, listen up. You have a few weeks left to save yourself thousands of dollars in taxes. And I'm not talking about generic advice here. I'm talking about the very real, very specific moves you must make before the year ends, especially with the new OBBBA rules messing with depreciation, payroll, and deductions. So today I'm giving you the 7 critical year-end moves every business owner needs to do fast, practical, and tactical. So with that, let's go. Move number 1, max out your retirement contributions. They can be a big tax shelter, but they can also be a big deadline problem. Most business owners think they can fix their retirement contributions during tax season. No, you cannot. You can do the profit share, but the other part has to be done before December 31st. Now, this is urgent. Once the clock hits midnight, you lose the ability to create or amend certain plans, and you can't get those deductions back. So here's what to do. We need to decide if you're creating a 401k before year end. If you haven't done that, you might have missed it, but let's plan for next year. You need to make sure you have a profit sharing if cash flow allows, and if not, get that added. Once again, we're close on whether you can do it. And then consider a cash balance plan if you need massive deductions. Now, we still have time to adjust your final payroll so your owner wages support the contributions you want. For example, if you pay yourself too little in December, you might block a major retirement deduction later when we're trying to do our profit share because our payroll wasn't set correctly. So this is big. Don't let this move slip by. Now, move number 2. Buy equipment and put it into service. The OBBBA brought back bonus depreciation. The problem, everyone thinks ordering equipment equals a deduction. Wrong. You only qualify for bonus depreciation if the asset is placed in service by December 31st. And this is a big deal. I run into this all the time. Somebody orders a piece of equipment or they need to order extra pieces for this truck, and until it comes in, they can't take delivery. We have to have the equipment by December 31st ready to be placed into service, or actually placed into service. That means it actually has to show up. It has to be usable, and it has to be ready to go. If it's sitting in a warehouse or back ordered, you get nothing this year. So here's what you should be doing this month. Buy equipment early. We're almost out of time, so we might have missed that one. But confirm delivery dates. Make sure it will be installed or road ready. This is critical. Get written confirmation if needed. For example, if you buy a $70,000 truck under the bonus depreciation rules, that could be a $70,000 deduction this year. That's how powerful this move is. But if you order it today and it's still in Chicago and you don't get it till January 1st, you lost out. No deduction this year. You're going to have to wait till next year. Big deal. Don't mess this one up. Number 3, let's calculate our year-end owner bonus. We can do a lot to manage our income this way. The problem is most business owners set their payroll in January and they forget about it. And then they find out in tax season their wages were too low or they were too high and we messed up other things. You cannot fix owner wages next year. We need to get this done in December. This can affect our retirement contribution, whether we had reasonable compensation, and then several of the new OBBBA income thresholds. So here's what to evaluate right now. Do I need a year-end bonus to hit retirement plan limits? Make sure you don't miss this. Do I need a higher wage for reasonable comp or compliance? Do I need a lower wage because I'm over a phase-out threshold? Should I shift income into 26 instead? Something to think about. If there's family involved, maybe what we should be doing is shifting an income to one of them to get our profit where we want for year end instead of us, because they're going to hit some of these new thresholds. There's a lot of planning we can do right now that's completely legal, but we have to be thinking about all these new laws, and you can't do this during tax season. We have to do it right now. Now, move number 4, a lot of people don't think about this, especially within their business, but we can do charitable contributions. Think smart stacking. We wait until December 30th and then we scramble, or worse, we miss out because we didn't plan. These deductions only count when the gift is made, but if you have an S Corp or a partnership, if you make that deduction, it will flow through to your personal return. So here's a tactical version. Do a donor advised fund contribution if you want the deduction now. We stack gifts if you're near the standard deduction. We can use that business charitable contribution where appropriate, but we've got to get written receipts. The IRS rejects undocumented gifts. So what's an example of what I'm talking about with this donor advised fund? Well, if you normally give $5,000 per year, stacking 3 years into a $15,000 donor advised fund contribution creates a deduction you can actually feel this year. And then over the next several years, we can give that $5,000 out, but it can help us hit those limits that we may be worried about. Now, move number 5, and this is important, don't miss your estimated tax payment. This is the easiest pain to avoid, and the interest the IRS charge has gone way up. Every year, business owners do a big year-end tax strategy, and they forget to make their Q4 estimate, and boom, penalties. Quarterly payments aren't optional. The IRS will penalize you even if you get a refund later. So our directive, mark this, January 15th is the deadline. But make the payment in December if you need the deduction inside this year. Now, that's for state payments, not for federal. But make sure we don't miss our deadlines. A simple $6,000 estimate avoids hundreds in penalties, and it only takes a few minutes. Move number 6. We've got to understand the new overtime and tipped worker rules. This is a major payroll trap. The new OBBBA rules changed how overtime deductions and tip reporting work, and most business owners have no idea. And I've been trying to tell you, but I'm going to keep telling you to make sure this doesn't catch you. If your payroll isn't updated before January 1st, you're going to start having compliance issues that can lead to penalties, misreported wages, and lost deductions. So right now, check your payroll system. Make sure it has the new OBBBA thresholds. Your old paper system is going to be hard to use going forward. Make sure your overtime classifications are correct. Tip workers meet the new reporting requirements, and that you're budgeting properly for increased payroll costs. It's very important as business owners that we have our payroll system right. We don't want to underpay our employees, and we don't want to overpay. We want to do it right, but you're going to have to really check your systems this year. Move number 7. We need to confirm our year-end purchases, bills, and cash flow. Problem is, we often find out later in the year that things went up and we didn't adjust our pricing or make sure we had enough cash reserves. You have a short window to position your cash flow for 26. And after year end, sometimes the damage is already done. It happened to me last year. I completely missed my phone contract went up and I missed it. And so I had to overpay for an entire year because I wasn't watching. My bad. Don't let that happen to you. But let's prepay legitimate expenses if we need to. We can review vendor price changes, plan for payroll tax increases, and refresh our cash flow forecast. Raise prices now if we need to. Even a small 3 to 5% price adjustment can absorb all these extra costs, because as a small business owner, the OBBBA is going to drive up costs, especially when it comes to compliance with payroll. So there you go. 7 real tactical money-saving moves business owners should be doing before December 31st. These aren't theory. These are the moves that can save you thousands and set you up for a stronger 2026. So make sure you hit subscribe. I've got more of the OBBBA breakdowns and tax smart business strategies coming your way. So I'll see you in the next one.